Good morning, good morning, good morning, everybody. It's Friday, September 9th, 8:20 a.m. Welcome, welcome, welcome. Stock market's always doing something you don't expect, right? All right, let's get into this. Let's get into this market. All right. Let's move over to the daily charts. All right. So, yesterday was a kind of a volatile day with um, Powell talking in the morning. Had some crazy movements, but then the market steadied itself, and we had another day that had some short covering. And the level I talked about yesterday, 401, 401.20 in the SPY, we came up to that, level. Okay, 50 moving average. However, obviously, right now we're gapping higher in the pre-market in the overnight. So, but this level in the RTH acted as resistance, right? We couldn't break it, but that was my first level that was a hurdle for the bulls, right? But now we're gapping over the 50 and the 200-day moving average. I'm sorry, the 100-day moving average. So that's pretty interesting to get up to that. So for the SPY, we have 405.84 as our next resistance level. Has a nice trend line, downtrend line here as well. So some confluence. Okay, that's a big level in the SPY. So let's see if we can tap that today. I'm not sure, but let's see, right? Let's look at the Qs. Okay, let's go to the Qs. So the Qs in the RTH session here, that's what we're looking at here, did get resistance at the 50% retracement. Fibonacci 301.85, and this trend line, secondary trend line here, it found resistance, but of course we're gapping higher, so little strength shown in pre-market, right? So we're about at 303 right now, 303.45. The 50 moving average in the Qs is 306, so a little different, you know. It's a little lower than the SPY. So the SPY is already above its 50-day moving average and 100-day moving average. The Qs are not quite there yet. Okay, but the level that is important is 307.22 as for resistance level. That's a big level. Okay, but in the Qs you still got to contend with the 50-day moving average and the 100-day moving average. So that's something that's, that you're going to have to look at, right? It's something that you have to respect, and because they're not exactly synced right now, the two markets, the Qs and the SPY, they're not exactly synced together. So this could cause resistance in the Qs, which could then cause resistance in the SPY or the futures. So that's things to look out for. Okay, and what do we have above? Like I mentioned yesterday, we got the 307, like I said, 307.22, and we have this trend line, okay, which is also matching the 307. That's confluence, right? We could get resistance with the trend line and the 307.22 resistance level, as well as you got a lot in front of us today for the Qs. 100-day moving average, 50-day moving average, 307.22, and a downtrend line. Okay, so that's the Q. That's the Qs. So let's go into the futures of what's going on now. Give me one sec. Okay. So a lot of things happened yesterday. So first, I want to point out, and I don't know if any of you guys noticed terminology, But I'm going to go to just the RTA session in the futures, which just means what you see in the SPY. But I want to show you in the futures, okay, something we call one time framing in the futures. So what we have now is the market's making higher lows, higher lows, higher lows. That's called one time framing in like market profile talk. So obviously that's short term bullish. Keep making higher lows, right? I'm sure everybody's heard that before. So that's one thing to point out, right? That's one thing, right? And the feather of the cap of a bull, short term. So let's go back to all sessions, right? So we can see the overnight and everything. Now, what happened yesterday, right? So yesterday was wild, to put it. That's still just, it was wild. You know, you had it moving higher, showing strength, sold off, dropped like a rock, then got right back and bought right back up. Okay. And you notice one thing I do plot here. This right here is a monthly VWAP, but kind of like tag this monthly VWAP, and then higher. But I know it came back down again, never touched it, and then we started moving higher again, right? Very volatile. However, overall, a win in the a little win for the bulls, right? So very important that something happened here. I always talk about value, right? And I track the most traded price of the week, the most traded price of the month, as well as the most traded price of yesterday, right? And also, I track most traded prices that don't get touched, which are called naked VPOCs. Some people call them virgin VPOCs. That's just most traded prices that haven't been touched. I don't want to get too much into that. We can get into it in a later date, but that's just something to track, right? So anyway, you guys know I always talk about that every day, about where value is, right? And I always say that we have to build value in order to establish foundation, right? And I was talking about a pocket. Yesterday, I said, look at this big pocket. It was like around here, right? And I said, let's see if we can build value and move value higher, right? So a couple things happened yesterday. So now you noticed let me get a better color, I'm sorry. Right here, the most traded price of the month is here now. And the most traded price of the week is here. So they're together. Okay? So we have 39.86.50 is the most traded price of the last month, and 39.80 is the most traded price of the last week. Whenever you have them together like that, okay? I don't think I've had a video recently where that's the case, but when you have them together like that, when they're both together, that means these prices have been traded the most over the last month and the last week. So they become kind of like your bull bear line in the short term right now. Okay, so the most contracts have been traded in this area for the last 30 days and the last week. That's very powerful. Okay, so this should act, if we're bullish, this should act as support. Okay, but it's the bull bear line now. So if the market does come down here, I don't expect it to just go like that. Okay, there's a lot of support here. However, if we were happen to come back down, that is bearish. Okay, so these are why I like plotting those on the line, because plotting those on my charts, because it's very important now. It's a very key level. We stay above it, bullish. Stay below it, you have to think bearish. Okay, that's a key thing, right? So value has moved with price. That's bullish. Okay, not all out bullish like I'm saying we're going all-time high. I'm just talking about the market now. Okay, so what are we doing now? Let's go into what we're doing now. So we're gapping higher. Okay, price is right here. Okay, we're at 40.36, and what's happened is we had a key support level at 40.15, like here, like in here. That's been touched many times, and that was a key level that I was looking at to see if we could break it. We couldn't break it yesterday, but look, we've broke it in the overnight. We broke that level. So, which is a little surprising to me, but this, little bear market rally is definitely in gear. Okay, definitely in gear. So, the name of the game today is we're gapping higher. Okay, RTH high here is going to be key. That's really our two things: RTH high, as well as the most traded price of the week and the month. If these get defended, right? Let's say first go with the gap. So if we gap and go, obviously that's very bullish. But we could also come down, not fill the gap, not even come close to the gap and go higher. We could come down to the gap and bounce. Or obviously you can come down and fill the gap a little bit and bounce. There's all these scenarios, right, that we can look at that will tell us, the sell the rip's coming, right? And I'm only going to tell you this. This will be key if we fill the gap and then push. Okay, I'm not going to give a million arrows, right? But this is key. If we fill the gap, break back into yesterday's range, and we come down here, and like I said, if you go like this, the bull little rally, the bear market rally is going to be over. But this is why we talk about the scenarios, right? This is where we talk about the scenarios. So this is also a key level too, right? I'll go into that later. If we hold it, that's bullish, right? And this big area here is the bull bear line. So that's just market jitter information for me. We fall below this line, there's not much, holding us back from dropping down to here. Okay. It's just a crazy market, and that could happen. Let's go to the Qs. Same thing. I'll go to the RTH session. What do we got, right? Same thing, right? Higher low, higher low, higher low. One time framing higher, right? Okay. Now we'll bring it over to overnight sessions and RTH sessions. Okay. So the most traded price of the month hasn't worked itself down yet. I believe it. It's higher up now. It's way up there, but it hasn't done that in the Qs yet. It's rolling, so it might come down just because I have it rolling every 30 days. So, but this has happened. The most traded price of the week's here, and we're gapping higher. We're actually in a supply zone here. Okay. Same deal. I'm still going to use this as a bull bear line. Okay. Still going to use this. And same deal. I'm not going to go over the same thing. We're gapping higher. Okay. Important level is here. And I'll show you key levels in a second of what I'm looking at in the Qs. Okay. So I'm not going to go into the, because it's going to be repetitive what I say again. So again, RTH high, which would be a gap, is what we're going to look at. That's the first line of going, okay, gets defended. That's bullish, right? If we go back here, obviously you could bounce here too. But if we go down here and we start to dip below and break below, then that's bad. Okay, we can go down. So that's the gist of that. Okay. Let's go over to the futures. The 60-minute, my 1 hour chart that I like to look at. Okay. All right, give me one sec here. Let me pull that up. There we go. Alrighty. Okay, so what am I seeing here? Let me just bring my marker over here. Okay. Obviously, there's the crazy volatility from yesterday. Okay. But then it straightened itself out, went higher. Okay. So the key level from yesterday was like 40.15, 40. Now I changed it a little bit to 40.11. I just changed it because now there's longs here being supported. So this is that level. Okay. It's been broken overnight. So if you can see, I can zoom out a little bit. This level has been resistance and resistance and resistance. And now it's broken in the overnight. Okay. So now we got to see if this 40.11 acts as support if it gets tested. Okay. Now there's a 40.40 now is acting as resistance in the overnight. So we also have overhead supply here. We have a supply zone here, right here. Okay. Which probably should slow it down. All right. Probably should slow it down. That's if we get a gap and go, and so that's key level 40.40. Maybe we break it off the open or something, you know. Other one is 40.11.25. So that should be support. Okay. And if we break this, that's like I said, this is that price I told you about. Okay. That should act as support. But if it doesn't, oof, you can see this is not support. Okay. That will get sliced through. So that's what I'm kind of looking at here. So we're looking at 40.40. See if we can break above it. If we can't, then 40.11 to act as support. Okay. So to the Qs. Got a similar picture here. Okay. Now, in the Qs, see they're not as it's in sync as I spoke before about. So we have this level of 124.71. It's key resistance. So it's been resistance here, here, and now here. So that's really gonna, if we break that in the Qs, this is gonna really move the ES or the SPY higher, because this is now been resistance. If we can crack that today, then yeah, it's gonna propel the SPY higher, and obviously the Qs. So we got to see, right? I have a trend line here too, so, and supply here, so that could slow down the market. Okay, it doesn't mean it has to. So really, in the Qs, similar to the SPY or the ES, the levels 124.71, support is 123.56. Okay, and then the key support is 121.40 if we fall lower. But this again, have to see if this holds. Okay. Alrighty. So let's move over to the market profile. Let's see here. Give me 1 second here. I'm just got to fix some levels that I didn't get a chance to fix. Just bear with me 1 second, everybody. And while I pull up the levels. already. So let's look. That's what we got going on here. Okay. Okay. So we're gapping higher. Okay. And oh, as I'm speaking, this 40-40 levels getting challenged here. So very simple today. It's pretty much like I already said it. Okay. Scenario could a gap and go. We could open, come down a little bit, find buyers, and we would go into a supply zone, which I would expect to be a little resistant, and maybe go to 40.71. Okay, that's one. We could also, I could see us pushing higher, coming back down, filling the gap, and maybe going higher. Okay, those are kind of like a little bit of a bullish take on it. And then we could also, obviously, I think this is the bearish scenario. We can come into supply, find some sellers, come down to 40.40, try to bounce, come back, fill the gap, get a little bounce, and then we find sellers. And one or two things are going to happen. This is that most traded price of the month and the week. I think we can balance here. Okay, you could either balance here because that's a huge wall, or we bounce off here and maybe establish new value up here. Okay, and then obviously the most bearish is, like I said, this level, these two boxes are very bull bear aligned, and if we can start to make move down here and start to accept prices down here, there's a good chance we can go back either to the lows of yesterday or to the 39.20 and maybe touch this demand zone just on volatility. Okay, I'm not going to go into the Q would be the same exact plan. Okay, we really need to see, because large gaps are hard to read. Okay, so that's why I'm giving kind of like, I don't really have any kind of like this will happen today, because I don't know. Large gaps are hard to read. So big questions are: do we fill the gap? Do we have a gap and go? Do we not fill the gap? Right? Do we come down to here? That all is going to answer what I'm going to do today, because I have no clue. Those are just the scenarios that I have to look out for. Right? Below this line, I'm bearish. So staying above it, I understand there's supply and there's a lot of stuff above us. So I understand that. Now, one thing to note, okay, as far as fundamentals, I didn't expect maybe these three pushes higher as much, right? And the TNX is down today, 1.0%, 1.09%. It's at 3.25. Okay, so the TNX is down. Like I said, I don't use that as that's what's going to happen today, but it is down. Okay, so CPI numbers are coming out next week. Okay, if we can hold these levels higher, okay, if we hold the levels higher and the CPI number comes in lower than expected again, that could be fuel to push us higher. Okay, that could be fuel to push us higher. And as I'm speaking, the market's moving higher. Okay, so this could be a gap and go. I don't know, but we're going to be going into supply zones in both the Nasdaq and ES. So be cautious. All right, but anything can happen. Anything can happen. So that's kind of like what I'm saying. Hopefully everyone understands that I'm just going by scenarios. If A happens, then I have to be prepared to be this way. If B happens, I have to prepare to be this way. I don't really have a feel of what's going to happen. I really don't. Let me see how I am on time. All right, I've been going 25 minutes. All right, I'll wrap it up here. So let's look at that gap fill. Let's look if we can drop below 39.80. That's a bear. You got to be bearish if we're below that. Gap and goes are hard to trade. So I wish everybody good luck today. And give me a comment, subscribe, give me a like. Much appreciated. Any questions, I'll try to answer them, or I will answer them. And everybody good luck today.